guys, welcome back to Basics episode 12, where Michael is taking me through kind of the ins and outs of trade ideas, or just some of the basics here to get started. We started the journey way back. If you want to click back to the beginning of the playlist there and kind of follow along, he's giving me the rundown on how to become a great trader.
Great trader now. Mm-hmm. Okay. I was going to first only make you okay, but I guess we can make you great. So last week we did the basics of trade ideas, how it scans the market, how it shows you what instruments you may be looking for. You don't know what you're looking for yet, but the point of this is just to give you something to follow along. So starting next week, we're going to go back into charting geometric patterns and different setups you can do, different trading styles and strategies. So I wanted to have you understand the basics and give you some scans so you can go through and just look at some charts every day. And at the same time, you can enter some orders, just play around. It's fake money to begin with, and I will reset your fake money when you have a plan and we're getting serious. But I just want you to hit buttons. So something as simple as if you buy someone's product that day, go and buy their stock. Just hit buttons.
Okay.
Right? Get a feel of it. So what we're doing today is all going to be about that. It's about order entry. It's about hitting the buttons. So we talked about last time how trade ideas can basically be a front end for a broker. Currently, it's Interactive Brokers. Soon, it will be E-Trade. That's all depending on, development time and all of that. So you can link to these brokers, but the beauty of it is the front end will still be the same. So that's what this is right here, which is called Brokerage Plus. So Brokerage Plus is just a way to automate your trading. It's a way to, you can fully automate it, right? If you want to go through and do alert windows for full automation, you can do that. If you want to go through and semi-automate, you can do that as well. You can actually just enter the orders yourself. But what I'm going to do is I'm going to set you up with an ability that you can right-click a stock, and I'm here on the sim, on my sim right now, so I won't mess anything up. Okay, so what Brokerage Plus does, just connected here to this sim, which you'll have to do every morning. So I guess you'll open up, you'll hit the connect button, connect to trade ideas, simulated trading, and then you're in. So one thing that you can do, there's a couple ways to enter orders, and we're going to go through those now. The first one is these buttons right down here. So this is how you would manually do it.
Okay.
We'll go through order types down the road. Don't worry about them too much right now. What you'll do, let's use Peloton for an example, just because I have that up here. So say I wanted to short Peloton, right? There's 100 shares filled in. So what happens is you'll see as soon as I typed in that symbol, the symbol part right here, that filled in with the right ticker. So just double check to make sure the right ticker is there. You'll see it in big letters right behind the chart there.
Right.
Just make sure those match, but that will be done for you. Pick your share size. For now, we'll start with 100 shares when you're doing it this way.
Now, are we going to get into share size at some point?
Yes.
Okay, great.
Share, it's everything, right? So you think about the whole coin flip math that we did before. If that coin flip is you risking your entire net worth on a coin flip, and if it hit heads, you have to give me everything you've ever owned, and if it hit tails, I give you double that amount. That's a bad deal because you're just putting it all on black and seeing what's happened. But if it was, I'll pay you $2 when you're right, and you pay me $1 when you're wrong, that's a good deal. You do that all day long. Right?
Okay.
So that's why share size and risk management is everything. For you guys out here, share size and risk management, it took me years of sucking as a trader until I figured that out. And that's what changed the game for me, is all risk management. So yes, we'll get into it. But for now, if you're doing it this way, 100 shares. Order types, we talked about a little bit. We'll talk about a little bit more. Remember, we talked about limit orders, stop loss orders, market orders, very, very briefly.
Okay.
For the first few seconds. We'll go back into that. We're going to use a market order, which is basically, remember the order type that says just get me in, whatever price. And then if you did want to put a stop, you would fill out this box. So for example, if I wanted to, let's do something to buy, because I know shorting can be complex in that. So say I wanted to buy, Apple released a new iPhone today, right? So say I think that if Apple gets over this $288 tomorrow, that it's going to move higher.
Okay.
I would put in this box right here, the stop price, the price that I want this order to go live. So let's make it 288.10. All right, just 288. And then what will happen is it will send a market order when that price is triggered. So if I hit buy, won't work in the after hours.
Okay.
Just do this as a stopgap for now. So what that will do is it will just put an order to buy if that gets over, and it will show here on the charts. So if you wanted to buy Apple as it broke this $288 because you're like, the new iPhone looks good, I think it's going to sell a lot, plus the technical analysis, plus statistical analysis we'll talk about later, you would just fill in here $288, and then you just click the buy button.
Okay.
So you see that line that's come out on the chart? That line is where it will buy the stock for you. So if you want to do any kind of adjustment, you can say, no, I want to wait till it gets to here to buy it. You can do that. You can, move wherever. Now, if you said, I want Apple, so say you're doing your trend lines, and you're saying, I want to buy Apple if it gets back to this trend line. So I don't want to buy it when it's spiking up. I want to buy it when it's pulling back. And let's call this 267. So we'll just delete that with the delete key. Then we will just type in under price 267, and we will just kind of clear this out here entirely, and then we'll click buy, and you can see it put an order there. So for example, if you wanted to buy Apple the next time it came and touched this trend line, you could put out that order, check it at the end of the day. If it didn't get filled, maybe move it up for the next day.
Now, okay, if it didn't get filled in the first day, will it stay there until it gets filled?
That's up to you, but we'll set it by default so that it will. You can have it so that you just leave the order out there for a day. You can have it so that you just leave the order out there for 5 minutes. If you're intraday trading, that's all customizable to you. So that.
And if you, so say you wanted to buy it at 269 or whatever we were buying it at.
Yep.
Would you have to watch it until you, so let's say you bought it at 269 and then it was going up, and then let's say it got to 280 and then started to come back down again. Are you having to watch that, to make sure you're not losing money? Do you know what I mean? So
that's what's called a stop loss order. So you know how we kind of said, if the price gets to this, get me in?
Right.
You can do that the other way around.
Okay.
So if, for example, I wanted to put a stop loss order out at 260, excuse our dog making a racket there, I would make this one market, and again, I'll go over this with you when you want to place your first order, and I would make this call it 264, and then we would hit sell. So you see the red line is the stop order.
Okay.
So I could put it here, and now I have set up a trade. So if Apple now comes back down to this trend line, the system will buy it for you automatically. And this is why I set you up with a cloud computer, so it's always up there running, right? And then what it will do is it will put out the stop loss order so that if Apple comes here and then just continues to go down, you're wrong.
Get back out.
You're out. Okay. But what you can do is, assuming that you're in, every day or so, you can just raise it up a bit. So say, for example, you wanted to say, I'm going to buy this, and then if it gets back below this moving average, this blue line that we talked about in the other one, that's when I'm going to exit.
Okay.
You could just raise it up every day under this line, right, if you wanted.
So you're kind of securing yourself a little profit on the trade if you're moving it up.
Right.
Okay.
So I am in a bunch of positions now. I am in, the best one I'm in is Slack, which their ticker is just work. So I bought Slack way down here, right? So I have the same, so just imagine this was a stop line. So now I bought it down here at, I think, 1650, right? Went up to 30, and then it pulled back to 22 here, and now it looks like it's going up again. So what I've done is I've just pushed my stop up to about this area.
Okay.
So now, even though I'm in 16...
You've made that.
Right.
Okay.
And I will just continue to do this as long as Slack
Okay.
continues to move higher. And then someday, at some point, it will reverse and get me out. And what I hope is that I'm in it for long enough, and that when it gets me out, that was near the top. You'll never get the bottom, you'll never get the top, but close enough to it. So that is basically how you enter orders. That's how you trail stops. You'll move the stops up as they go against you. One rule, you never move a stop down, right? It's a very dangerous. If you're short, you can move a stop down. But,
Okay.
if when I bought work, my initial stop was right under this low.
Yeah.
Right? If it looks like it's going to stop you out, every human being has an inclination to say, if I just move this down a little bit, maybe it won't hit my stop and then it will go up and it'll make a lot of money. That is rule number one. You set your stop and you leave it. You can only move it in the direction of you losing less money.
Okay.
Hard and fast, beat yourself up if you ever do it. It's like an account killer. And the reason for that is, again, when we talked about the coin flip, is you're going to risk a small amount on every trade. If you're right 30% of the time, and every now and then you get something like this wicked trade I have in work where the stock doubled, then even if you're only right 30% of the time, you're still going to make money. But if those small losses ever turn into massive losses because you lost control, you're dead, right? So that's one way to do it. Now, the other way to do it, which is something that we'll talk about more as things go on, but I'm going to set up some basic ones for you, is what we call order entry scripts. So, for example, I hope this works after hours. It may not. We'll see. I'm just going to buy using this one. All right, it actually worked. So this, again, is my sim. So what I did there is I just said, I like the stock, I want to buy it. And what the system did for me, and again, we'll get you more into this as it went, it said, okay, this algorithm is risking $50 on a trade. And here's the price of the stock at $28.14, and here is the low of the day at $24.58. So you see that it bought me 14 shares. It basically did the math and said, okay, you want the stop at the low of the day, and here's the current price. So here's the difference between the low of the day and the current price. And it did the math so that if I get stopped out, it risks me $50. And it just did all that for you right there.
Okay.
So that's what we're going to end up doing, where you'll be able to right click and say, hey, buy me this stock here, and it will run the math so that when you're wrong, it will risk a certain amount. And that's done by these, you see these little B and S buttons up here?
Mm-hmm.
It's just buy and sell. So I don't even know which algo I have this set up. You see when I clicked buy, it changed my cursor. If I say I want to buy work, if it gets over there, it won't work after hours with what I have set up. But what it would do is say, okay, it's going to buy you at $30. The low of the day is $25, or we're going to do what's called ATR. It's going to just take whatever the stock normally does as a range, and that will be your stop. And it will just do those numbers for you. So those are the different ways to enter. And then the last bit of this is these different tabs here. What you'll do is, if you ever want to cancel orders, you'll go to the orders tab up top here.
Mm-hmm.
And then you can sort these by live orders. And live orders are also in white if it's not sorted. You see all the white orders? These are orders that are out there. A live order means it's out there, it's in the market.
What's the green and red one mean?
Well, green is one that was filled.
Okay.
And red is ones that I've canceled.
Okay.
Right? So.
And are you seeing this? It probably depends on what you have it set for. Is that like for the day or for the month or for the week or?
Filled and canceled are for the day, but the live orders are just if they're out there, they're live orders, right? So if I go and I filter by live, then I know I have orders out for Apple and work, right? So what I can do is I can say, okay, I want to click on this work order. Maybe I don't want this here anymore. I just want to cancel it. So for example, you wanted to buy a stock when it was pulling back to a trend line, but then the stock just kept going, never gave you a chance. You want to cancel that order.
Now, here's a question that's kind of off track. So you know how you put the order out and then it goes to your broker, mm-hmm. and then they have to get it or do it or
fill it.
Yeah. When you cancel that, you don't have to pay them?
Nope.
Okay.
It's only when you get filled.
Okay.
So yeah, so for example, maybe Apple's a better example. So I have this order out. I want to buy Apple when it gets to this trend line. Say tomorrow, the rest of the world agreed with you that this iPhone was awesome. It's going to be the greatest iPhone out there. It opens up way up here at like 350. You're like, okay, so I'm not going to get my pull back to my trend line. I'm out. You can find the order here. Just hit the cancel button and it'll go away.
Okay.
Right? Cancel this one just because you don't want to leave that out there and it'll go away. Because orders that are out there in the market take up your buying power. So we're giving you $100,000. That means in theory you can buy $400,000 worth of stock.
Okay.
Right? So every order you put out there, the broker assumes that it's filled and it takes that buying power away from you.
But wouldn't it matter what the price of the stock is?
Yeah. Well, no. You get $100,000, and what happens is the broker gives you what's called margin, 4 times margin. So you have up to $400,000 worth of stock you can buy. Now, each share of a company is different value, but you still have 400,000. So you may be able to buy 2 shares of Amazon.
Right. Okay, that's right? What I mean. Yeah.
But you could buy
a bajillion of something.
JC Penney, which is now a 24-cent stock. You could buy a shit ton. Yeah, they're having a rough time.
Yeah.
So yeah, that will change, but your buying power remains the same. So what I'm saying is if you have a bunch of orders out there that you're never intending to get filled, they're still taking that buying power. So you want to cancel orders.
Okay.
Plus, right, if Apple, if your synopsis on Apple was, I want to buy it if it pulls back to this trend line, and then all of a sudden it gaps up the next day, if you leave the order out there, it will stay out there in theory forever. So if you just forget about it, and
one day it will,
3 years from now, if Apple tanks back down to this level, you don't want it there anymore because it's no longer your trade.
Right.
So now you know the basics of entering orders and these scans. So your homework is going to be to go through these scans every night. Again, I will customize them for you as you find out what you like and don't like. And then go through our AI, which you'll just find here, every night and see what she did. It's usually like 5 or 10 trades. Set out an order a day and then check it the next day. Make sense?
Think so.
All right. So that is it for this, guys. Next week we are back to learning setups, learning technical patterns, statistical,
the
fundamental
fun stuff.
And then now there's going to be homework with every episode, because when I teach you about descending triangles, it's going to be go out there and find a descending triangle and make a trade off it.
Okay.
All right. That was a very scared look you gave me there.
The descending triangle.
That's one of my favorite setups.
Well, hey.
A lot of geometric diamonds and triangles and butterflies and bats.
Upside down hearts.
There's rounded bottoms. There's cup and handles. There's head and shoulders. There's
knees and toes.
Not knees and toes. Maybe you'll patent your own technical pattern called the knees and toes.
There you go.
Okay, guys. Once again, if you're watching the video on my channel, that means that the next one is already up on Jessica's. So go there if you want to catch up on that. Links to both of our channels are in the description, as long as a discount code and link to get trade ideas. Full disclosure, that's an affiliate link, so it kind of financially rewards us for doing this. If you're interested in giving it a shot, do that. As well as I will put the cloud link for the setup that I'm going to give Jess in the description as well. So if you're already a Trade Ideas subscriber, you can just copy that link, go File, Load from Cloud, paste that link into this box here, and you'll have the exact same layout that Jess is looking at. So that is it, guys, and yeah, trade safe out there.